Good morning, everybody. It's Tuesday, September 3rd, and this is the AgYield War Room. I'm Dan Dempsey, and I'll be moderating today's session. As always, if you've got any questions or comments, please feel free to drop us a line in the chat area, and we'll be sure to get to it during the show. Overnight markets here, December corn up a half at 401.5. November soybeans were up 7 at 10.07. And December Chicago wheat was down 2 at 549.5. This morning, the USDA announced an export sales announcement of 132,000 metric tons of soybeans to China for 24. Good morning, guys. Hope everybody had a nice weekend. We were talking here a little bit before the show. We're starting to see a little bit of a turn up here in these markets. You got December corn back above $4, no beans above $10. Finishing weather, has been kind of so for some areas. And you've got some dryness in South America that seems to be materializing a little bit. So just a lot of things that with the potentially big short here in the corn and soybean complex, you could see a little excitement if some different scenarios play out. So Justin, maybe a few thoughts to kick us off this week, and we'll throw it around the room there.
Yeah, thanks, Dan. Yeah, I agree. I think we're obviously seeing some short covering right now in the bean complex. We're above the 25-day moving average, which I'm not a huge technician, but one of the things I look at for just short-term trend, and we haven't been above it really since April. So when we started closing below it in April, we went on a $2.50 basically break into August. So we're trading above those levels. We've picked up some demand near the lows on this break. So some positive news. I think there's like I said, it is really dry in South America. It's the dry season, but it's still any way you look at it, it's extremely dry. So that being said, am I concerned about that today? No. But when you have like you said, when you have a big fund short, you've got the trend's been going down for so long. You've probably had some forced farmer selling going into first notice day, cleaning out bins, all those kinds of things. Yeah, now we'll see if we can get some upward movement here and see if the funds want to be a record short going into a dry South American start and political season and all those kinds of unknowns.
That seems like a pretty crazy proposition. If
Yeah, right. I mean, like today, like for instance, we had Canola's limit down this morning. China came out and looking at anti-dumping of cheap canola, in retaliation for some of the electric car tariffs that Canada imposed on China last week. So these political things that are going to happen, especially around these elections, I think you got to be kind of cautious on what could happen.
Sure. Ben, what's on your mind in the East here this morning?
We're definitely not having a good finish to our growing season here, particularly in Ohio. We can't lose sight of how far we've come to the downside, particularly in soybeans over the last 6 weeks. Underpinnings here also that we're going to start to see interest rates lowered. Could be viewed as mildly supportive to grains. But we most likely still have a lot of, I think we definitely have a big corn crop. The bean crop's probably suffering a little bit. Rains that were forecasted Friday into Saturday were a bust. And I think that the short in soybeans is much more vulnerable than the short in corn. So, whether or not we can tick enough technical barometers off and get some momentum in here and some covering remains to be seen. But first hurdle, we above the 20, above the 25 day, we don't even have the 50 day until 1036, which is another 30 cents higher. And that would just put us back into where we were trading kind of right in before that last WASDE report. So, we went down a lot in a short period of time. And I think there's enough here to keep the short very nervous to where things are going to be bought on breaks, in particularly before we get into the next report. I don't know if we'll see big changes in the SEP-WASDE, but certainly it has been less than an ideal finishing window for soybeans.
Yeah,
So,
just to add to that, so we're starting to get some clients, south central part of Illinois starting to harvest. We'll start getting some more results here, I think, in the next week with some early bean and corn harvest. So I think until that pro farmer number we were talking about before the show, I think I would trade that as the high mark on yields for beans until we get enough evidence that would back it up.
And that was a 54 number, right?
55. I mean, was it 55? I mean, it's
54, yeah, 54.9, I think was the
yeah.
number.
So
Gee.
it's a really big number. I think that's what the market's been trading. So now we're gonna have to see some yields that start to back that up. We are getting a lot of those private groups that are going out and doing corn yield estimates throughout the states. So those are coming back really strong as expected. So I think beans is also one of those things that's just so hard to guess the yield. It's like, oh, it's green, it looks good. No one's really good at projecting bean yields, myself included. Right? It's like, oh, it looks really good. Like, well, that could be 70 or 100 bushels. I mean, it's really hard until you actually get in there and see what they are. So.
Okay. Anything, Dustin? Anything on your mind as we start the week here? I know one thing to note: we'll have crop conditions today, and then everything is pushed back a day because of the holiday yesterday. So sales will be out on Friday. But I guess what are you looking at here to start the week, Dustin?
A small jump in the Brazilian currency, so that's supportive. And then we're still post first notice day for corn, and so far, last week we did kind of find lower prices into midweek, and we're rebounding kind of post there. So could still be a post first notice day support. We'll have to watch for that. So
very good. We'll transition here quickly over into livestock. Rhode Island hog slaughter was down 3%. Beef production up 0.8% last week, while cattle slaughter was up 0.5%. One thing to note, I thought was interesting. So you managed money, a net buyer of 21,000 hogs. I thought was pretty interesting last week. So I guess what are your thoughts as we start the week?
Yeah, managed money really chased this thing higher. I mean, you could see on the chart just how strong it was. So, I mean, overall, I think it was just that maybe we're expecting a little bit of post Labor Day business. I mean, the cash market has been kind of easing here. Pork market's been strong, but it has been kind of since trending lower. So, I think overall, it's the end of grilling season. It's over. The party's over. So, I think everybody wants to kind of focus on what that's going to mean in the next couple of weeks. So, managed money is pretty much bought their whole position, the previous week. And usually we see that kind of support last into this week in the futures market. And there's a big seasonal kind of precedent for the market to just keep on going up from here, which I think at this point, it seems like the managed money, it seems like that's going to be where the better gains are, relative to maybe the cattle market. They're only carrying about 38,000 net longs, and they've been shaving that down gradually as kind of cash has been weak. Beef has been weak. So they sold 3,500 cattle after buying 24,000 hogs. So I think that's kind of interesting overall. So I think just this week we're looking for just kind of early calls, kind of steady, possibly lower again in cash, possibly dragged down by the north. But it seemed like north was a little bit on the stable side, whereas the south was actually coming down last week. So we'll see how it is. There's not going to be, I don't think, any cash trade to write home about this week on the cattle side of things. But yeah, hogs have kind of maintained this trend. Above all these kind of intermediate, longer term moving averages. So their trend is good, whereas live cattle markets seem to be struggling in the front month with the 20-day moving average. So usually that's kind of a bad sign just in the interim. So we'll see how it shapes up. But, all the news is just kind of not great on cattle. But, obviously somebody really likes the hogs this week.
Very good. I appreciate that outlook, and we'll be sure to have any updates in that in our afternoon and evening comments there. If you like the show as much as we enjoy putting it on, throw us a like or subscribe. We appreciate everybody that tunes in on a daily basis. We have a lot of fun doing the show. Like and subscribe doesn't cost you anything, and certainly keeps you up to speed on everything AgYield, custom premium content that we put out, things of that nature. So we appreciate everybody that supports the show there. Every day that the markets are open, we're streaming live on X, Facebook Live, and YouTube Live, 8:15 Central Time. Appreciate the thoughts and comments here this morning, guys. It was a good conversation. Hope everybody has a good start to the week, and we look forward to talking to you again tomorrow.
Thanks,
The
Dan.
War Room is proudly presented by AgYield. For over 50 years, the AgYield team has provided grain marketing and risk management solutions for growers across the country. Our veteran consultants harness cutting-edge technologies to pinpoint risk, optimize market performance, and protect your farm's profitability. Discover a new approach to farm revenue management at agyield.com.
Hey guys, Jack here. Be sure to support the show by hitting the like button, leaving us a comment, and subscribing to the channel for all the latest updates. Thanks for watching. We'll see you next time.